Assalamualaikum warahmatullahi wabarakatuh. Let me introduce myself. My name is Salma Alisha Sahdiya NPM 234120046 Accounting Class 23A, Intermediate Level Financial Accounting Course. Here I will explain about merchandise inventory. Definition of merchandise inventory. Merchandise inventory is a product purchased by a company to resell for profit. This inventory is one of the current assets in the financial statements because it is expected to be sold in the near future. Method of recording merchandise inventory. There are two recording methods commonly used in accounting for merchandise inventory. A. Periodic method. In this method, inventory recording is done only at the end of the accounting period. B. Perpetual method. In this method, inventory recording is done every time a transaction occurs, purchase and sale. This system allows companies to know the amount of stock in real time and is more accurate for stock control. Inventory valuation methods. 1. FIFO, first in, first out. The first goods purchased are the first goods sold. 2. LIFO, last in, first out. The last goods purchased are the first goods sold. 3. Average cost method. Inventory value is calculated based on the average purchase price of all goods. Example. The company Salma has inventory transaction data for July 2023 as follows. Transaction data. July 1st, beginning inventory balance of 120 units at 1,800,000 Indonesian rupiah. July 4th, purchase of 60 units, 1,900,000 Indonesian rupiah. July 8th, sales of 90 units at 2,400,000 Indonesian rupiah. July 12th, purchase return of 15 units from purchase on July 4th. July 18th, purchase of 50 units at 2 million Indonesian rupiah. July 22nd, sales of 70 units at 2,500,000 Indonesian rupiah. July 27th, sales return of 5 units from sale on July 22nd. July 29th, purchase of 40 units at 2,100,000 Indonesian rupiah. July 31st, sales of 80 units at 2,550,000 Indonesian rupiah. Required. 1. Calculate the ending inventory value on July 31st. 2. Calculate the cost of goods sold, COGS, for each sales transaction. Calculate ending inventory as of July 31st. Inventory calculation based on FIFO method. 1. Beginning balance, July 1st. Inventory, 120 units, 1,800,000 Indonesian rupiah. 2. Purchases, July 4th. Inventory added, 60 units, 1,900,000 Indonesian rupiah. Total inventory. 120 units, 1,800,000 Indonesian rupiah. 60 units, 1,900,000 Indonesian rupiah. 3. Sales, July 8th, 90 units. Sales take from beginning balance first, FIFO. 90 units, 1,800,000 Indonesian rupiah. Remaining inventory. 30 units, 1,800,000 Indonesian rupiah. 60 units, 1,900,000 Indonesian rupiah. 4. Purchase returns, July 12th, 15 units. Returns reduce purchases, July 4th. 45 units, 1,900,000 Indonesian rupiah. Remaining inventory. 30 units, 1,800,000 Indonesian rupiah. 45 units, 1,900,000 Indonesian rupiah. 5. Purchases, July 18th. Inventory added, 50 units, 2 million Indonesian rupiah. Remaining inventory. 30 units, 1,800,000 Indonesian rupiah. 45 units, 1,900,000 Indonesian rupiah. 50 units, 2 million Indonesian rupiah. 6. Sales, July 22nd, 70 units. Sales take from beginning balance, 30 units, 1,800,000 Indonesian rupiah, and July 4th purchases, 40 units, 1,900,000 Indonesian rupiah. 30 units 1,800,000 Indonesian rupiah. 40 units 1,900,000 Indonesian rupiah. Remaining inventory. 5 units 1,900,000 Indonesian rupiah. 50 units 2 million Indonesian rupiah. 7. Sales returns, July 27th, 5 units. Returns added back to inventory from July 22nd sales for 1,900,000 Indonesian rupiah. Remaining inventory. 10 units 1,900,000 Indonesian rupiah. 50 units 2 million Indonesian rupiah. 8. Purchases, July 29th. Inventory added, 40 units 2,100,000 Indonesian rupiah. Remaining inventory. 10 units 1,900,000 Indonesian rupiah. 50 units 2 million Indonesian rupiah. 40 units 2,100,000 Indonesian rupiah. 9. Sales, July 31st, 80 units. Sales took from inventory. 10 units 1,900,000 Indonesian rupiah. 50 units 2 million Indonesian rupiah. 20 units 2,100,000 Indonesian rupiah. Remaining inventory. 20 units 2,100,000 Indonesian rupiah. Ending inventory value as of July 31st. 20 units 2,100,000 Indonesian rupiah equals 42 million Indonesian rupiah. 2. Calculate the cost of goods sold, COGS, for each sales transaction. COGS equals beginning inventory plus net purchases minus ending inventory. Beginning inventory 216 million Indonesian rupiah plus net purchases 269,500,000 Indonesian rupiah. Goods available for sale 485,500,000 Indonesian rupiah. Less ending inventory 42 million Indonesian rupiah. So the cost of goods sold is 443,500,000 Indonesian rupiah. That's all I can say about the inventory of merchandise. Wassalamualaikum warahmatullahi wabarakatuh.